Imagine a world where you could own a piece of the Eiffel Tower, a symbol of architectural marvel, or a fraction of a rare Van Gogh painting with just a few clicks on your phone, making art ownership more accessible. This is the promise of asset tokenization, a revolutionary technology poised to reshape the way we perceive and interact with various assets. Asset tokenization is democratizing ownership, making it possible for anyone with an internet connection to invest in assets that were once out of reach for many. It's like breaking down a massive skyscraper into millions of tiny bricks, allowing individuals to own a small piece of something much larger and significant. This transformative technology is not just about creating new ways to invest. It's about unlocking value, enhancing efficiency, and fostering a more inclusive and accessible financial system for everyone. In this exploration, we'll delve into the intricacies of asset tokenization, unraveling its inner workings and exploring its profound implications for the future of finance and beyond. Get ready to witness the dawn of digital ownership, where tangible and intangible assets converge in the digital realm, opening up a world of possibilities for investors of all sizes and backgrounds. At its core, asset tokenization is the process of converting the ownership rights of a real-world asset into a digital representation on a blockchain. This revolutionary process is reshaping the way we think about ownership and investment. Think of it as creating a digital twin for a physical or intangible asset, like a piece of art, real estate, or even intellectual property. This digital twin is not just a simple copy, it is a dynamic representation that can be interacted with in various ways. This digital twin, known as a token, contains essential information about the asset, such as ownership details, transaction history, and any associated rights or privileges. These details are securely stored on the blockchain, ensuring transparency and immutability. These tokens can then be bought, sold, or traded on specialized platforms just like traditional assets. The ease of trading digital tokens opens up new opportunities for investors and asset owners alike. The beauty of asset tokenization lies in its ability to fractionalize ownership. This means that high-value assets can be divided into smaller, more affordable pieces. A single asset, such as a valuable painting, can be divided into thousands or even millions of tokens, making it accessible to a wider range of investors. This fractional ownership model lowers the barrier to entry, allowing more people to participate in the investment. Imagine owning a tiny fraction of a masterpiece, participating in its potential appreciation without needing to purchase the entire artwork. This opens up a world of possibilities for small investors who previously couldn't afford such high-value assets. This process not only democratizes access to traditionally exclusive investments, but also unlocks liquidity, enabling assets to be traded more easily and efficiently. Liquidity is a crucial factor in the investment world, and tokenization addresses this by making assets more fluid. By transforming illiquid assets into easily transferable tokens, asset tokenization injects much-needed fluidity into markets, benefiting both buyers and sellers. This increased liquidity can lead to more dynamic and responsive markets, ultimately driving economic growth and innovation. Furthermore, asset tokenization has the potential to connect global markets, allowing for cross-border transactions with ease. This global connectivity can lead to a more integrated and efficient financial ecosystem. Investors from different parts of the world can now engage in transactions that were previously limited by geographical boundaries. This inclusivity fosters a more diverse and vibrant investment community. Security is another significant advantage of asset tokenization. The blockchain technology underlying these tokens ensures that all transactions are secure, transparent, and tamper-proof. This level of security builds trust among investors and asset owners. As we move towards a future where digital tokens become a common part of everyday transactions, the potential applications of asset tokenization are vast. From real estate to art and intellectual property to commodities, the possibilities are endless. In conclusion, asset tokenization is not just a trend. It is a transformative force that is reshaping the landscape of ownership and investment. By making assets more accessible, liquid, and secure, tokenization is paving the way for a more inclusive and dynamic financial future. The magic of asset tokenization happens on a blockchain, a secure and transparent digital ledger that records and verifies transactions. Think of a blockchain as a digital notary, meticulously documenting every transaction and ensuring its authenticity. When an asset is tokenized, its ownership details are recorded on the blockchain, creating an immutable and tamper-proof record. This eliminates the need for intermediaries, such as banks or brokers, as the blockchain itself acts as a trusted intermediary. This decentralized nature of blockchain technology brings unprecedented transparency to asset ownership. Every transaction is recorded on the blockchain, visible to all participants, fostering trust and accountability within the ecosystem. Furthermore, the use of cryptography ensures the security of these transactions, making it virtually impossible to alter or counterfeit ownership records. This robust security framework safeguards investors and enhances the overall integrity of the tokenized asset market. Section 4. Real-world applications. From real estate to fine art. The applications of asset tokenization are vast and varied, spanning across numerous industries and asset classes. This revolutionary technology is reshaping the way we think about ownership and investment, making it more accessible and efficient for everyone involved. Let's explore some compelling real-world examples that illustrate the transformative power of asset tokenization. Imagine purchasing a fraction of a commercial building or a luxury apartment with just a few clicks. This is not a futuristic fantasy, but a present-day reality made possible through real estate tokenization. Real estate tokenization makes this possible, allowing investors to diversify their portfolios and access properties that were once out of reach. By breaking down high-value assets into smaller, more affordable tokens, it democratizes the investment landscape. Owning a piece of a masterpiece is no longer a distant dream. Art tokenization is revolutionizing the art market by enabling fractional ownership of valuable artworks. Art tokenization enables fractional ownership of valuable artworks, allowing art enthusiasts and investors to participate in the art market with smaller investments. This not only opens up new investment opportunities, but also provides liquidity to an otherwise illiquid market. Tokenizing traditional stocks and securities streamlines the trading process, reduces settlement times, and enhances transparency. This means that transactions can be completed more quickly and with greater confidence in their accuracy and security. This opens up new avenues for investors and increases efficiency in capital markets. By leveraging blockchain technology, tokenization ensures that all transactions are recorded on an immutable ledger, providing a higher level of trust and accountability. Musicians, artists, and creators can tokenize their intellectual property, such as songs, patents, or designs, enabling them to monetize their work directly and engage with their fans in innovative ways. This direct-to-fan model not only increases revenue potential, but also fosters a deeper connection between creators and their audience. These examples highlight the transformative potential of asset tokenization across various sectors. From real estate to fine art, and from traditional stocks to intellectual property, the possibilities are endless. As the technology matures, we can expect to see even more innovative applications emerge, further blurring the lines between the physical and digital worlds. The future of asset ownership and investment is being redefined, and the journey has only just begun. Section 5, Tokenization in Action, a step-by-step illustration. To solidify our understanding, let's walk through a simplified example of how asset tokenization works in practice. This process, while seemingly complex, can be broken down into manageable steps that highlight the transformative power of blockchain technology in the financial sector. Imagine a group of investors wants to tokenize a historic building. This building, with its rich history and architectural significance, represents a valuable asset that can be fractionalized to allow multiple investors to own a piece of it. They engage a tokenization platform to facilitate the process. This platform acts as an intermediary, providing the necessary tools and services to convert the physical asset into digital tokens. The platform conducts thorough due diligence on the building, verifying its ownership, value, and any associated legal documents. This step is crucial to ensure that the asset is legitimate and free of any encumbrances that could affect its tokenization. A smart contract, a self-executing digital agreement, is created on a blockchain. This contract automates the enforcement of the terms and conditions of the tokenization, ensuring transparency and security. This contract outlines the terms of the tokenization, including the number of tokens issued, ownership rights, and any other relevant details. It serves as a digital representation of the agreement between the asset owner and the investors. The asset, in this case, the historic building, is divided into a predetermined number of tokens. Each token is a digital representation of a fraction of the asset, making it possible for investors to own a share without purchasing the entire property. Each token represents a fractional ownership stake in the building. This fractional ownership model democratizes access to high-value assets, allowing more investors to participate in the market. The tokens are distributed to investors through a security token offering or STO, or listed on a specialized exchange. This process is similar to an initial public offering, IPO, but for digital assets. Investors can then buy, sell, or trade these tokens, just like traditional assets. The liquidity provided by tokenization platforms and exchanges makes it easier for investors to enter and exit positions. This simplified illustration demonstrates the key steps involved in asset tokenization. From due diligence to smart contracts and token distribution, each step is designed to ensure a secure and transparent process. While the specific process may vary depending on the asset and platform used, the underlying principles of blockchain technology and smart contracts remain consistent. These technologies provide the foundation for a more efficient, secure, and accessible financial system, paving the way for the future of asset management and investment.